Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Monday, February the 27th, 2023. Both the S&P and the NASDAQ did battle somewhat higher, initially coming through an opening hour and a half with very little movement, kind of choppy, kind of sudden outbursts, et cetera, which I thought, boy, hoping the day is not going to remain like this. But once finally kicked in, we did get some decent moves, and that ended up being profitable. When it finally decided to finish its move to get up higher, which would have come at about 10 o'clock. So initially, on some figures this morning that came out at 8:30, the market did put in a nice rally, and we kind of just bounced around then as that opening. Then we bounced around again within the next hour, and going up, creating a high, coming all the way back down, and then it just kind of was a bouncy day, but we had a few nice moments of good rally, and then solid decline, and then some decent rallies, and then followed by a solid decline. So those declines came about 10 o'clock Eastern, and then 2 o'clock Eastern. So don't know what the coordination, if there was any inside that, but that's kind of was the break in between. All in all, it kind of was a slow and boring day. We didn't really get too far, but it did kind of put the picture together that the minute wave 5 and the minor wave 1 are back in place. And here, I did end up taking it down to the 15-minute chart just to make sure that we did get a 1, 2, and then a 3, and a 4, and a 5 to complete that. And we did, but I had to go all the way down to 15 minutes to do it because it happened within these hours. But nonetheless, it did complete, and it appears that we have done wave A, minute wave A of minor wave 2. So let's start building our fibs. The first one that we're going to want, and actually the second one, is we want to go start using just the retracements. Again, we're going from this high down to Friday's lows. And so we continue to find we should have resistance for this minor wave 2 up here at 40.38 to 40.40. Right now, we've got on the hourly chart, we've got the 200 EMA coming down and resting right on that 3A2 fib level. Above that, we have 40.55, which again, still pointing lower. We have the 200 SMA. And then above that, we have 40.67 and then 40.95. Those remain the two resistance levels, which I would be looking for to complete this particular minor wave 2, if it doesn't come in lower. But with wave A getting pretty close to 0.382, I think we stand a pretty good chance that we'll get up above and get up into here beginning of this week. So tomorrow, maybe Wednesday. So what I want to add to that now, we're going to go back over, and first thing I will add is we're just going to, again, run retracements. Get it this way. We're going to retracements from that low up to this high. Oh, come on. Let's try that again. Down there to up there. There we go. So we can see that the B wave kind of already reached a level. And that support level was 39.77, and it's 618 retracement of wave A got us into this little intervening decline, found its support, and then rallied back up into the close. So we stand a very good chance, actually, that the B wave within this minor wave 2 may be complete, and that would be at this afternoon's lows at 39.78. And if that's the case, then we're going to be looking for, and I'm going to add one more. See, we're going to do this all the Fibonacci way. So we got the Fibonacci coming down for the overall wave 2. We just had the wave B. I'm not going to put it in. I'm going to give it, if it needs to come down a little bit more, it may find its next support level, 39.75, up in that area. But if it continues to break higher, we get back above the 4 and the 8, and we get back above the 50, which is now sitting at right just below 4,000 at 39.97. And we're likely headed up to complete that C wave. And that being the case, the next thing we'll put in is our estimates. Oh boy, not my day and the way I'm doing this. Hitting the wrong side of my mouse. So I get there, and then I'm going to bring that down. And I'm going to say, just in case this is the low, we may get a little adjustment to this number, depending on how far, if the market does come back down. So wave C then should find its first resistance, right? Well, wave C would be 618 of wave A, and that's going to come in at 40.25. So we just need to get above that 40.25 level that's already that high. Excuse me, which was already 40.24.75, if you want to be exact. But we're going to call it 40.25. So I would be looking for this C wave to get itself above that level. Do it pretty cleanly. Our next resistance comes in at 40.33. Then we have 40.38 along with the 200 EMA sitting there. Then we have the 200 SMA and 100% where wave C would equal wave A, and that's at 40.56. I'm going to call that 100%, but the 200 SMA comes in at 40.53. So we got a little cluster, moving average, and a fib at the 78.6 level and at the 100% level. If we want to go full bore with that C wave, then we'd be looking for it to break 40.67 and end up within 40.67 up to 40.95. And that would reach the 50% and the 62% level for this B wave. Doesn't need to go there, but that would be pretty common. But again, we continue to have a pretty strong overhang against the market when it comes to, we're dealing with higher rates. We're going to raise the rate 50 basis points in March. And if we're looking at the Fed funds rate moving out to September, it is suggesting that the rate's going to be closer to 5.5. So we'd be looking for an additional likely 50 basis point hike out in as far as September, or a combination of rate hikes, getting the Fed funds rate to those levels in September. So that continues to be an overhang against the market. And we will see how all that's going to go as this all progresses. So again, reaching these upper levels, possible, but with the overhang on the market, it's likely going to be quick and rejected. We had many decent rallies within our timeframes today, but they were rejected. We ran up, it was rejected. We ran up, it was rejected. We could run up again and just kind of get it going, and then we should be able to get up and finish the ABC. I'm not putting that B wave in just yet, but by the time we get out here tomorrow morning, I may have put it in there. But I'm just showing if that low holds at 39.78, then I would be expecting that C wave up. We have our resistance levels, and we kind of have a picture of where the market will run into that resistance and stopping points to complete wave C, and then in turn, the minor wave 2. What comes after that is a minor third wave. Again, Elliott guidelines. Elliott tells us all the time that within the third wave, it is normally the longest and the strongest out of waves 1, 3, and 5 within a impulse move. Right now, that impulse move is to the downside. We have minor wave 1 in and complete, and that would have been at Friday's lows. But that one, if we're taking 41.86, so we have 41.86, and we're going to take the low at 39.43, I believe it was. No, 47. 39.47. Wave 1 is 200 and we're going to call it 240 points, high to low. Wave 3 being the longest and the strongest would then be expected to drop more than 239 points. And in fact, it usually would come in somewhere around at least 100%. That would put it there, but 1.618. So it's likely going to be dropping us depending on where we come in. Even if we got only up to 100% at 40.65, and we got initially 239 points, it's going to come. So let's call it 40.56 minus 239, and that should be equal. We're already looking at 38.17, 3,800 or below. So that next stronger downside move would be anticipated or expected over its length, over its term in action, to drop the S&P likely down into these levels. And again, remember, we're counting an intermediate C wave. And right now, these are all being associated with the upside move. We will again remove some of these so that we can take a look at the downside move. So the C wave, 100% C equals A at 33.61. And then again, if I just, I'll take this out to the 4-hour chart, and we can get a little bit cleaner picture. So here we have 41.86 up top off of that low, which was in mid-October at 35.02. Now, where would this C wave look to come in? At 100%, we're looking at 33.61. And so we've got all these points of support coming into play as this starts to unfold. And again, I'm just going to stick with my 4-hour chart, remove that, and we're going to take a look. We get an ABC, possibly we get up here, possibly we get to 40.65-ish into that area. If that completes wave 2, then we're looking for wave 3 to begin. Again, 239 points or 240 points right off the bat, bringing us down to 38.20. What do we have? 38.20. We're below this level. We've broken below that level, and we're starting to come in down below. I would suspect that we're going to, again, get much greater than that, that wave 3 would be much larger than wave 1. So again, 38.17 down below, 37.73 comes in, and then we have 36.76 for a third wave, would fit very, very cleanly. Then we get another bounce, then we start to come back down. I'm looking for a wave C to finish somewhere around 33.16, even lower. I'm actually feeling that once this gets going, we should be able to come in somewhere around 3,000 down to 29.80. I'm going to move over to the NASDAQ. So taking a look at the NASDAQ. NASDAQ basically same type of a pattern. We're looking for that minor wave 2 correction. Let me go back down to that hourly chart so we can see what we took care of today. Same thing. Looks like we got our A wave, our A of minor 2. So that's a minute A wave of minor wave 2. And we're looking like we may have completed the B wave, but you can see how I want to give that a little bit more room. So what I'm going to do first off is we continue to have the resistance, again, 0.382 resistance for that minor wave 2 up here at 12,255. Just before that, at 12,236.37, we have the 200 EMA, the 200 period EMA, and then right above it at 12,307, I'll call it, we have the 200 SMA. then we're getting into that area where most common Fibonacci resistance will be found for a wave 2 is going to come in at 12,358 to 12,460. Now, market could power up there, and we know the NASDAQ can do it. We get a couple of these going, and we're going to be up there. I do expect or suspect that should it come into a spike like, it likely will be rejected. As the end of the move, it'll be rejected. So again, if we're looking for what could possibly be coming in this B wave, first thing I'm going to do, let's put in our retracements for wave B. And we only came down to a 50%, so the S&P's come down a little bit further. So I'm going to give this the same benefit of the doubt that it can get down to 12,025, maybe even a little bit lower, complete this B wave, and then start our additional rally phase in the form of a C wave up. So let me take this off, and now we'll go back and we're going to use our extensions to get what we think that C wave will look like. And again, I'm going to come down and use that low, but we're looking for something even a little bit lower, so adjustments would be necessary, but we can give an estimate. We can give a little bit of an estimate where we think where we can come in up here. Wave C would equal wave A, which is actually very common at 12,324, 325 right in there. And that's right below that 50% level at 12,358. So that pretty high. We put that up on the probability scale. It's going to carry a lot of weight that will likely finish up into that area. If we come down a little bit lower in this internal B wave, that's going to lower all those as well, just by a little bit. It'll keep the larger ones in place and lower this 100% and these others in between. Now here, if this is where all we get, and we're going to start up in a C wave, C can come in at 0.618 of A, particularly within the corrective move like it is, and that would come in at 12,223. I rarely see those as much in the NASDAQ as I do in some other charts and some other products that I follow and then do Fibonacci on. So I would really expect it to kind of come up into here. That's more common for the NASDAQ and likely do it pretty lickety split. So I'm really thinking that this, if we could get wave A of minor 2 done in one day, basically, and then we can get a B wave, so actually maybe A and B done in one day. C wave maybe takes 1 or 2 additional days. So maybe by Wednesday, Thursday, we'll be all done with this and we'll be able to start our next downturn. Just to kind of fill in some blanks there, we have economic numbers later this week. So Wednesday, we have ISM manufacturing. Tomorrow, by the way, 8:30 Eastern, we have Advanced U.S. trade balance. We have the trade balance, retail inventories, wholesale inventories, and the Case-Shiller home price index, which some people look at, some people don't. It really has not too much to do with the market. And then at 10 a.m. Eastern tomorrow, we have consumer confidence. That can be known as a market mover. And we already get little hints that the consumer confidence is likely dropped. They're not as confident in what's going on. Wednesday, we continue to have ISM manufacturing and construction spending all at 10 a.m. Eastern. Thursday, initial jobless claims, U.S. productivity and labor costs. And then on Friday, ISM services also at 10 a.m. On Thursday, all of the pre-market come in at 8:30 a.m. So not the biggest week for our economic numbers, but it's just the way the cycle kind of unfolds. So actually, that's going to be about it. We continue to look for the completion point of this minor wave 2 on both markets. The alternate would be that this all completed minor wave 2 here. That's the alternate on both markets. And if that's the case, we drop. And we drop quickly, and we're forming the beginning stages of a minor third wave. And it should resemble kind of what I've often talked about, like this, but it doesn't stop. It just keeps going. And it doesn't even take its time. We get a lot of these That's what a third wave is going to look like as we start to come off. So, but right now, I'm not necessarily looking for that before we get up and complete this minor wave 2. That's going to be it for today, and our next update will be on Tuesday, the 28th of February.